Can Bitcoin thrive in tariff chaos? As trade tensions rise and global powers clash over tariffs and technology, the financial world braces for impact. But amid the chaos, one question cuts through the noise. What do these escalating trade wars mean for Bitcoin? Let's break down the risks, the signals, and how Bitcoin might not just survive, but prove why it exists in the first place. Disclaimer: this content is for informational purposes only and not financial advice. Please do your own research before investing. The new tariff reality: why Bitcoin stands out. The world is sliding into a new phase of economic protectionism. The US is slapping fresh tariffs on Chinese EVs, semiconductors, and more. And Europe may retaliate. This isn't just geopolitical theater. It's a sign of a slowing, fragmenting global economy. Tariffs raise costs, disrupt supply chains, and fuel inflation. The result: equity markets wobble, bond yields spike, fear rises. And yet, in that uncertainty, Bitcoin's unique role becomes clearer. While traditional markets may falter under political manipulation and monetary intervention, Bitcoin remains neutral, decentralized, and globally accessible. The market response: turbulence, then transformation. Markets hate uncertainty, and tariffs deliver it in spades. We've already seen spikes in volatility across risk assets, a flight to safety, including gold, and ironically, Bitcoin, institutional pullbacks from high beta plays, while Bitcoin remains in focus as a potential macro hedge. Here's the key: Bitcoin isn't just another crypto token. It's increasingly behaving like digital gold, a hard money alternative when the fiat world gets shaky. What to watch? Drop in the DXY dollar index equals to weakening confidence in fiat. On-chain Bitcoin accumulation and Bitcoin ETF inflows. Bitcoin's divergence from equities during market stress. These are signals that smart money is starting to treat Bitcoin differently, not as a bet but as insurance. Global friction, local escape. Bitcoin's real-world value. Tariffs don't just hurt big markets, they hurt people. In countries facing inflation, currency devaluation, or trade restrictions, Bitcoin becomes a financial escape hatch, a store of value when local money collapses, a borderless tool for remittance and saving, a path to economic freedom when banks or capital controls shut the door. We've seen it in Turkey, Argentina, Nigeria, and the list is growing. Bitcoin is not waiting for Wall Street's approval. It's already working on the ground. What the smart money is watching. Want to know where Bitcoin is headed? Watch the data. BTC outflows from exchanges equals accumulation. Whale wallet activity equals strategic positioning. Stablecoin inflows equals dry powder waiting to deploy. Use tools like Glassnode, CryptoQuant, and Into the Block to front-run the trend, not chase the crowd. How to position yourself for the tariff era. 1. Stack sats, not stress. Avoid over-leveraging. Keep a core BTC position and use volatility to your advantage. 2. Accumulate on macro weakness. Global instability isn't a bug, it's Bitcoin's thesis in action. 3. Stay Bitcoin-centric. Forget the noise. In a time of monetary manipulation, Bitcoin is still the most secure, decentralized, and battle-tested asset. 4. Think globally, act locally. Watch how adoption plays out around the world. Bitcoin is a lifeline where fiat fails. Final thought: Bitcoin was built for this. This tariff storm is shaking the pillars of traditional finance, and Bitcoin is standing tall. It's not just a trade. It's a tool for sovereignty, a hedge against inflation, authoritarianism, and central bank overreach. So while the markets panic, stay calm. Stack Bitcoin. Trust the process. If this breakdown helped bring clarity, hit like, share, and subscribe to Hodler's Lifestyle. We bring you macro to crypto insights every week. No hype, just signal.